Welcome to SmithWeekly Discussions, an occasional program where we put on for our readers and followers of SmithWeekly research. Please note this program is a private discussion and everything contained herein is for the entertainment and educational purposes of our readers and followers. With that, we hope you enjoy the show and are in a comfortable position to enjoy the discussion. We are talking with Dustin Garrow, Managing Principal at Nuclear Fuel Associates. Dustin is a longtime consultant in the uranium mining business as well as to the nuclear power industry. Dustin has well over 40 years in the business, holding numerous positions with U.S.-based nuclear industry participants. Before returning to his consulting business in 2015, Dustin held a high-level position at Paladin Energy. Dustin, how are you?
Good. How are you doing, Andrew?
Doing well. Hey, before we get to our chat, we want to say thanks for the questions that came in from Jacob L., Wim D., Anhill O., and other SmithWeekly readers and followers. Dustin, question for you. For people who do not know, what services do you provide at Nuclear Fuel Associates, and why should clients be contacting you?
Basically, as you pointed out in your introduction, I've spent actually more than 40 years in the nuclear fuel markets, principally uranium, but also conversion services. So I've worked for a number of uranium production companies, a number of them U.S. domestics, and as well as some foreign ones, as you mentioned, Paladin. And basically, focused on the supply-demand picture with an emphasis on the supply side. In other words, again, I've spent most of my career with primary producers, but also, in contact with virtually all the utilities worldwide. And so I have a pretty good feel. And I actually did work in a fuel group at Portland General Electric very early days in my career. So I've got a pretty good sense of how they go about their business. But that's what I've been providing is kind of both market and contracting consulting, as well as, a little bit higher level strategic thinking, particularly for companies that are either in the production area of uranium or want to be. And the other thing I can mention is that I am the Chief Commercial Officer for the new investment fund, Yellow Cake PLC. And so we did the IPO that, was successful last July. But that was, a lot of discussions about the market and, where is it going post Fukushima, and what are the main drivers? In other words, what has caused the price to go up, and what looks like will continue to bolster, let's say, upward momentum in the uranium price.
Right. Well, I can see a number of different parties could use your services, whether it's a nuclear utility, the midstream, obviously, uranium mining business can use the expertise, and quite honestly, some of these funds out there that are looking at the space, they could probably use your expertise in directing of which way to go there. So that's good stuff. I appreciate that. So you were participating in the drafting of the 232 petition. Was there discussion with other U.S. uranium businesses about joining the petition? Why didn't everyone get on board to make 100% representation?
Well, first of all, I do some work for Energy Fuels, one of the two primary supporters of the 232 petition. And that's a really good question. I think that some of them were a little hesitant because of the cost. There was and continue to be attorneys' fees, things like that. And I think they had a pretty full plate. I think they liked the idea, but were not really kind of, let's say, in a position or wanting to be, directly identified with the two petitioning companies, because it obviously came, I think, as a surprise to the market globally, but particularly to the U.S. utilities as a, I guess potentially an increased uncertainty on how they're going to fill their future particularly uranium requirements. And now, as you know, the investigation has broadened to conversion and enrichment. So, the Department of Commerce is looking pretty much at the front end of the fuel cycle. And what are, it's not necessarily, is it going to be there to help fuel commercial utility nuclear program requirements, but it is, and it was emphasized, it's national security. In other words, there is the Department of Defense that still potentially will look toward more nuclear material down the road. And one of the main drivers is, does the government want to have a viable domestic fuel cycle in support of obviously operating nuclear plants, which have a national security kind of aspect because of the stability of the grid, but also on the military side. In other words, as you may or may not know, if you are involved in the weapons side, which I was back when I was on active duty in the Navy, you have to use U.S. origin material. You can't even use close ally, Australia, Canada, you name it. That material cannot go into your weapons programs. So, that's really, I think, kind of been the drivers. And I think, a number of the smaller producers that are either, in production or, are trying to get to that point, just basically said, hey, yes, through the UPA, Uranium Producers of America, we clearly are interested. We think this is important, but they felt comfortable with Ur-Energy and Energy Fuels kind of, I guess, carrying the load forward. So that's kind of a long-winded answer to your question about, why did it end up being, the two producers as the champions of the 232.
Well, I'll knock a little bit on the other way there for you. First of all, some of these actors that proclaim to be, real reputable uranium businesses in the States are maybe not so reputable as they should be. So you certainly have some promoters and some different companies out there that I could see why Energy Fuels and Ur-Energy would want some of these folks as part of their petition. That's one. And then also, as Mark Chalmers said when we discussed back a couple weeks ago, he said, some of these other businesses are out of Australia, they're out of Canada, they're out of Russia, they're out of these other questionable jurisdictions for applying to this situation. And so, I see that answer, and I see your answer too, and it makes sense, because there are some there that they wanted someone else to pay for it, or they're just not quite cutting it as far as their contribution there to the situation. And then also along those lines too, I think just recently one of the Navy commanders or something, a news piece that came across the channels here was talking up, the importance of nuclear energy in the United States from a national defense standpoint, and also for the military being able to do what they do. So your comments go right in line with that. And then, too, if Trump's going to step out and knock on GM for closing plants and cutting jobs, and if he's slapping Mary Barra around, the CEO there at GM, then why not? Why is the midstream, upstream, and downstream, the whole mess in the fuel cycle? Those are lost jobs. Those are closed plants and so forth. So, why not? So the 232 petition is going to be interesting to see how that works out.
Yeah, and at this point, there's a broad spectrum of perspectives on it. But yeah, just for the listeners, back in 1980, I was already in the business at that time, there were more than 20,000 employed in the uranium business in the United States. Now, we were producing more than 40 million pounds a year, and we could get into the economics and the on and on and on. But it's right now, I saw a number the other day, it's around 500. So I mean, the industry was effectively decimated, and I think the point is it's right on the cusp of effectively disappearing. So it's not like there's a lot of idle capacity. There were some 26 uranium mills at one point, and now I think physically there's 4, and there's only one that's operational, that's likely to operate in the future, which is Energy Fuels. So I mean, you really don't have a lot of idle capacity, but certainly enough to answer the requirement for 25% of what the petitioners had recommended, 25% of U.S. utility uranium needs, which would be about 10 million pounds a year, depending on which forecast you look at. So, again, it's an industry that's undergone tremendous change, and is in pretty marginal condition right now. Let's put it that way. So.
Right, and they're going to have difficulties meeting that 25% without some significant capital investment. So it'll be interesting to see how that plays out. And the decline of the industry jobs is kind of like the decline in uranium stocks. I mean, it's kind of just flatlined, and it's come down from its highs and just flatlined out and almost died off. So it's almost a correlation. So next subject. Will the U.S. Supreme Court side with or against Virginia Energy regarding their case to lift the state ban on uranium mining?
An interesting question. And again, just a little bit of background, which I'm sure you're aware of. That deposit has really been around quite a while. Union Carbide through Umetco Minerals owned it. And, if memory serves me, it was literally back in the early 80s. And I think the important thing is technically, it's a very attractive deposit. I mean, it's very mineable, would be open pit, I believe. But again, I think when you say, going to the Supreme Court, that's a hard call to make. I mean, it's kind of really states' rights versus the federal government. And, can they dictate to Virginia, will they allow uranium mining in the state, which is different, we all know, than if they were going to open a coal mine or gravel pit or something. But, with the changing complexion of the Supreme Court, with Justice Gorsuch and Kavanaugh coming on, there could be a pretty strong, move toward not allowing, or I guess directing the state to lift the ban. So we'll just have to wait and see. I think it's one of these things. It's not clear cut, and but from a personal asset standpoint, in other words, the owners of the deposit, can they really take away that economic value from them? But it'll be interesting to see what happens. I mean, it's not a big project. I think it's 3 to 4 million pounds a year was the kind of proposed annual production, which would be less than 10% of the U.S. consumption, and south of global consumption, the way it's moving, close to 200 million fairly soon. So, I think we'll just have to wait and see. I mean, the fact that the Supreme Court was willing to take that on shows they're clearly interested. And so, if I was betting, I'd be a little bit on the side that they direct the state to lift the ban. But that's just me with being a non-attorney. So.
Right. No, that's good. It's good information. And we're trying to get Walter Coles to come on possibly and chat with us about this, because we've done a research for a time, and Virginia Energy, of course, has been a bumpy stock, up and down. Yep. And it's been a fun one to trade if you're a trader. But on the subject, we had listed Virginia as a speculation in our nuke report that we put out in early 2017. And so Virginia was thrown in there because, Energy Fuels had some ownership, Sprott had some ownership. The stock has a small amount of shares outstanding, and it's been a bumpy ride. But we threw that out there in the speculation column, and it'll be interesting to see how that plays out. And then, of course, the Supreme Court's a complete wild card, between Trump and Robert, Chief Justice there fighting on Twitter and the comments about different crap. But you never know what happens at night in D.C. when they all go home and have a cocktail and call each other. So you never know.
Yeah. You never know. But again, I think that's important. It's an important issue for the listeners because there are technically attractive uranium deposits that just happen to be in the wrong place. In other words, because this is the most politically charged commodity, let's put it out there. I mean, I've been told repeatedly uranium mining is the most heavily regulated mining activity in the world. When you look across the entire, let's pick on Berkeley and their project at Salamanca in Spain. I think they've already got 120 permits and licenses, and they still can't move forward. They're still working on a couple more at the federal level. So, I mean, that's what you're looking at when you say, I'm going to get into the uranium mining business. It's not a local, town council that says, sure, go ahead and mine your deposit. It's an incredibly complex business, and sometimes logic has no place. In other words, you can say, hey, this particular deposit should clearly move forward, and it can't. And some of them never will. So, I mean, the state I know you know well, Oregon. I mean, they have a ban on uranium mining, and even if it was, I don't think the population there would ever allow a uranium mine to go forward. It just isn't gonna happen. So anyway, that's part of the complexity of the uranium industry in and of itself.
Well, yeah, and with that too, I think it's important for listeners to understand that, the location and the government, the red tape you're dealing with is important. So obviously, Spain's got some issues, and there's a little bit of perversion at the regulatory level there. Obviously, it's been given a clear view on that. And then with regards to your comments on Oregon, I'm from the state, but it is in a sad state of affairs. No pun intended. And the interesting thing is about the Virginia energy stuff is that it's on state land, whereas in Oregon, as you know, as you head out west, the federal government begins to become the major landholder. And so this, and there is some uranium deposits in the eastern Oregon area. So out there, it's all BLM property, a little bit of, Department of Agriculture, U.S. Forest Service. But so it is interesting out there if that ever becomes a fight with the state of Oregon on how that works on federal lands. It's going to be another battle in court. And anyway, nonetheless, it's interesting stuff. So let's look forward to see what the Supreme Court does and how Virginia Energy goes. And moving on, as a consultant to the industry, you've seen and consulted with a number of companies. Today, looking at the sector, are there a few names that you like from an investor standpoint?
Well, it won't surprise you. When we did the Yellowcake IPO, we did probably more than 60 one-on-one meetings or conference calls, and that came up fairly often. When the investors, found out that I worked in the production side. Well, who would you recommend? I mean, if you look globally, obviously Cameco. I mean, it's going to be pretty much in everybody's portfolio. But first of all, let me comment. There's not a lot of companies, with the consolidation, and we may or may not touch on the sale of Rossing by Rio Tinto to the Chinese. But coming down to say the U.S., the reason I worked for Energy Fuels and they were my first client after departing Paladin, is they're in the best position in my mind to benefit when the market improves, just because of production capability, diversification of supply sources, the management, a lot of the professionals have been there for, number of years. And then you start getting down to, uranium energy. I think at Hobson and what they've got in South Texas is still pretty solid. It's not big. I worked for a company down there many years ago that moved on to Wyoming just because the deposits were bigger and it gave you a much longer mine life. But uranium energy is involved now in Wyoming, and so I think they show a lot. Your energy, they've been in production for several years. I think it's a well-run company. Peninsula, I think they're still struggling a bit at Lance, but again, I know Wayne Hiley really well, and he's extremely talented in the operational technical side. But then you get into, a whole group, as you mentioned, of maybe they've got one small deposit. They may have a couple of people involved. So it's really hard to get, when the price takes even a more significant move up, which I think it will, rising tide will lift all boats. So I think, there will be a general improvement in share prices. But to try to pick out specific companies kind of below, I hate to call it tier one, in the U.S., but it really is. Then you get into those that have, like I said, small deposits, and they probably really aren't interested in getting into production. That'll be a whole nother area. The last time we had the big price uplift, I know, as you're well aware, outside of Kazakhstan, there was really the two Paladin mines that were kind of ready to go forward fairly quickly, and they got into production. I mean, a number of the guys in Wyoming, it took them, 4 or 5 years just to get their permitting done. So, the list is pretty small on what I consider companies that are likely to get into production. But I think some of them have a business model of, well, we'll be bought out. And so we'll kind of keep, we'll drill some holes and put minimal investment in our company and our projects because we're never going to be a producer anyway. So not to say that's a bad strategy, but they're not going to put uranium in a can, and that's okay. So.
Yeah, I think that works for some, especially the ones that have a good management team and a good project. I think some are a little bit on the faker side when it comes to obviously being able to commission a plant, Dustin, as you know, and that's a whole nother hassle and entering into contracts and delivering and dealing with the boats and the ports and everything else. So it is really a whole different situation. It's not like stuff, certainly in this industry. Stuff that has some issues you have to hack through and a lot of red tape, and so it'll be interesting there. And you are in Energy Fuels certainly, and there's some other ones in the States there, and Uranium Energy Corp could probably look at Energy Fuels playbook to kind of help catch themselves up, but nonetheless.
But it takes a big commitment, Andrew. It takes a big commitment. I mean, that was the big plus with Paladin. John Borshoff, he's like me. Kind of has uranium in his blood, and he was going to build a uranium production company. And so he was willing to take that risk and bring in the people early and kind of do soup to nuts, everything from exploration through transportation, logistics on the final product. But as you know, that takes a lot of capital, takes a lot of expertise, and takes that commitment by management and the board and being able to convince investors that it's a good move to make early in the cycle. But I think a lot of these guys are saying, well, we just, we had the run up and then we had Fukushima and, we'll just kind of wait and see, what happens. Right. And then we'll kind of implement some kind of business plan, I guess. So anyway, which again has implications for the utilities. And they tend to not be quite as understanding. They'll look at projects on a spreadsheet and go, well, they say they're going to produce in 2021, and they've got nothing at this point. Well, it takes years to get these projects going. So.
Yeah, it'll be interesting to see how it plays out, and certainly for those companies out there that are going to try to go from drill holes all the way to cake in a can. Coming out, delivered to the port, it will be quite a move, and it's extremely difficult to be able to do that. But as we can tell from the last cycle, Paladin was able to do that, and they were obviously one of the top performers of the cycle. So it'll be interesting to see who does that this time and how things play out. So moving on, in your opinion, why did the large majority of of the businesses in the last cycle failed to lock in long-term contracts in excess of 50 per pound uranium that would have provided operational sustainability post-Fukushima?
Well, again, I think we talked earlier, my area of involvement has been principally long-term contracts and kind of that whole aspect of the industry. And, not to kind of go back into history too much, but that was one thing with Paladin. John recognized that marketing was a critical element of being a uranium company. In other words, this isn't a commodity that you can sell on a computer terminal. You push enter and you've just sold 100,000 pounds for 5 years. You literally have to go out, and all the utilities are different. I mean, there's a kind of an assumption that, let's even pick the U.S. There's, I think, 23 uranium buying organizations in the U.S., certainly around 20, and all of them have different kind of approaches to the market. In other words, what do they want to see? What is your credibility? I mean, they really want to be comfortable that if they commit to a certain group, that they're likely to receive the pounds. They're in the industry to operate reactors, okay? And they need to have that fuel. There is no excuse not to have fuel when a reactor is being, refueled. And so they have to trust. And I think part of it with Paladin is, they were ready to go and the projects looked good. The financing was lined up, and, some of the people they hired had good relationships with the fuel managers to where they said, yeah, if you tell me this is going to happen, I'm pretty comfortable that it will. But I think some of the other companies didn't realize you've got to make that expenditure on the contracting marketing side. You've got to send the marketers out. They've got to meet with the utilities, make sure the utilities understand, the project, the timing, the environment. And that's how you end up with, that group of, bankable contracts, which were certainly there. But I think a lot of the companies, again, they were too far back in the process to go out and get contracts. And so I think, you've got to be there at the old right time with the right product. And that's how you get that 60, 70. I think at Paladin, we did some contracts that were above $70. Now, it would have been nice if the market would have been sustainable and we could have either extended those or, even gotten new contracts. But, Fukushima came in, and that pretty much, as they say, marked paid on, long-term contracting. When the spot price starts to drop from 70, eventually down below 30, the utilities step back and say, well, wait a minute, I don't know where this is going to stop. And so I think it was a matter of timing for a lot of these groups. So. Right.
And the other part, too, to that is locking in at $70 a pound. That sounds really nice. Obviously, quantity and time matters. Had that been a 10-year contract with a significant quantity, oh boy, that would have been nice. But yeah, absolutely. Certainly it is an issue, and it'll be interesting to see how folks reconsider and how they play their cards. I know Mark and I chatted about this as well, and it's going to be interesting to see where people start locking, maybe just a little bit of operational funding and then moving on. Are you going to maybe lock 15-20% of capacity at 50 and then maybe lock some more and then leave some for speculation? It's going to be interesting to see how that goes. And
then that's not an easy, in fact, you mentioned talking to my friend Mark Chalmers. He and I sat down yesterday and had a similar discussion of, as the market improves, say you can produce, pick a number, 4 million pounds, how do you lay that off? What price levels, what duration, who the customers? The customers are all, people think a utility, they're all the same, and they're not. There are better customers to work with than others. Do you market offshore? That's one thing. Energy Fuels, for example, has focused principally on U.S. utilities and now beginning to say, well, should we be out talking to the Chinese, the Middle East, the Indians, the Europeans, because Peninsula did a very nice contract with the French. So I mean, it starts to raise a number of fundamental questions for the business model. Is how do you lay that product off? Right. So anyway, that's like you say, it'll be very interesting to see as the price moves up, how that happens. So.
Yeah, absolutely. It's complicated, and when you're throwing in boats and everything else and foreign countries into it, from the standpoint of a U.S. Company, it's going to be interesting to see how that goes. But the good thing about Mark is he's got his connections internationally already, being an Australian and so forth is good for his situation. But I can tell you his immediate problem is how is he, Dustin, how is he going to get his long-term contracts fixed in at vanadium prices right now?
There are no long-term contracts, so you don't even have to worry about it. Yeah,
right.
I work for the old Energy Fuels, and the company's produced vanadium in the past, as you well know, and there are no long-term fixed-price contracts. So you may get a multi-year deal, but it'll be, as you know, mark to market at time of delivery. But yeah, I hear the price is like 28 for vanadium, and it would be nice to lock that in for a while. But anyway, a quick comment. You keep coming back to transportation, and we may or may not touch on Namibia, which is one of the preferred uranium mining jurisdictions. Well, shipments out of Walvis Bay, the only deep water port, there was one ship a month, and sometimes it didn't call at Walvis Bay. So it had all kinds of implications for, where did you lay off your inventory? When did you ship it? And it was owned by the Russians, the shipping line. So it was one ship a month that would come in. Excuse me, I don't know if I said a day. One ship a month that came into the port that would carry Class 7 cargo.
Right, and I would imagine that whole deck of that boat was rented to Paladin.
Well, or to Rossing. Everybody ships out of Walvis Bay. So anyway, long story short, just the transportation side can be, and now we've got new, quote, channels of shipping to Shanghai and to Mumbai. And so that's a whole new set of, issues, shipping lines, schedule, anyway. So it's complicated.
It has a set of complexities, and you certainly have to have connections with the shipping lines because there's not very many out there that are going to transport this material. And so, because I'm sure it's got plenty of licensing problems within itself, and it's interesting to see how that'll go this time around. And with the Chalmers thing on vanadium, I would just say that our view's changing a little bit on it, and even if it's at a discount, 20, 15, take a 2 to 3 year contract if you can get it, and offer up the discount as a sweetener. And so I think that's a good situation because I don't see people are going to disagree with this, but vanadium I don't see it I don't see it holding for long. So anyway.
Well, I mean, it's like it's like uranium. It goes up, spikes, comes down. So it's kind of it's got its own set of quirks, and like you say, I'd love to, but a high price gives you options, which sometimes creates more complex decisions. Do you sell at that discount? So anyway, it's a lot of fun for the marketers.
And with that, I'll say too, when we were talking about the long-term contract stuff, a lot of these businesses probably should be calling you because you have those relationships. So I'm not sure what your hourly fee is or daily fee is, but it's probably well worth it. So
I would like to think so. It's pretty modest actually. So.
Well, there's a good network of connections, and you have them. So I'm going to skip just this one here and move on the question list I had here. But more or less, Mark and I had a discussion about why the majors like the BHPs, the Rios, and the Techs are not looking at the state of the uranium industry and thinking from a value standpoint and a math standpoint, why wouldn't we start to get back involved? And with that, we just sent a letter to some of the royalty companies, the Sandstorms, the Silver Wheatons, the Francos, and the Mavericks, and those folks, and the Royal Golds. A little bit of a stir up of, hey, you know what? You guys might be focused on precious metals, but you know what? We see that you have copper. We see that you have zinc. We see that you have these other, base metals involved in your portfolios, and you guys are looking for deals. Franco was involved with some oil deals, and the bottom line of it is, these we've had some response as well. We're focused. Our investors are focused on precious metals, and that's our focus. And I said, well, that's fine. If you guys have 51% of your portfolio in precious metals, that's great. But you can speculate with some of the other pieces. And right now, the uranium industry looks ripe for potentially some deals. And with that, it's the same thing. We mentioned it today. McDonald's, they're known for hamburgers, but you know what? They've changed their menu. They've appealed to new customers. They've got other things. They sell coffee. They sell donuts. They sell whatever else you want to call it. They sell different things on the menus besides hamburgers, and they have a nice, diverse real estate portfolio. Yep. And so you have to look at value. You can't. So in the natural resource industry, if you're a royalty company, you would look at the natural resource industry as a whole. And right now, we kind of said, maybe look at uranium. And there is some potentials for some good deals. So we stirred the market just a little bit this week with that letter. So anyway, nonetheless, comments on that one?
Yeah, I think you mentioned some of the majors, like Rio Tinto. Obviously, with the Ranger mine in Northern Territory of Australia effectively closing in 2021, and now their sale of Rossing to the Chinese. They're exiting the industry. And I think I know them quite well. And I think the feeling is this industry is complicated. It's subject to massive black swan events. And, we've got these other 58 projects and uranium just will take up too much of our time. So that's one thing. I was just asked the other day, well, the price goes up to pick a number, 50, 60, you're going to see, the big mining companies come in and buy up some of these projects. And I don't think so. They've basically put uranium, it's not even on the back burner. They've pushed it off the back of the stove. And it's like too complicated, takes too much time, which then creates opportunities, though. You see me, I'm always looking for the upside. The companies that do focus on it, be it a Cameco, be it a Energy Fuels, be it, maybe a Deep Yellow where John is now, it creates more opportunities. You don't have to go out and, slug it out with, Rio Tinto to get projects. They're just not going to come back, I don't think, because they'll go, well, wait a minute, what if there's another, Chernobyl, and you go, well, yeah, but, look at the value that you can create. But I don't think the industry in their mind is big enough. This is why, why isn't, there's a futures market and all that? Well, the industry's too small. And so maybe that's the case where it doesn't pop up on some of the radars. And I think, some of the royalty companies, this is fairly new. Uranium Royalty Corp has been created to focus obviously on uranium. And, it's a financing vehicle that has not really had any role to play in uranium. And I think it's because they look at it and say it's too complicated. I want to look at gold. I mean, the Indians have weddings and they're going to buy a bunch of gold. I mean, you look at uranium and you go, well, not to get too far off, but look at the changes in the perception of demand. Just yesterday or day before in France, the president said, well, wait a minute, we're still trying to get from 75% to 50% of our electricity generated by, nuclear. But if you look at the numbers, what he's proposing is a cutback of 20% in the nuclear fleet because demand is growing. And so, and we had Taiwan, New government comes in. Hey, we're getting out of this. And I know the Taiwanese really well. They were a big customer for Paladin. And so they've cut back on buying. They were ready to shut down. And now they have the referendum, and the population says, no, we want to have nuclear. And so literally they're now saying, oop, we better look at that phase out schedule. And so anyway, I think that all of those complexities kind of scares the companies that haven't been in nuclear or uranium. And so then they've got to make a commitment. And again, back on the Yellow Cake IPO, it's clear there's a number of these big investment firms that have looked at things like you and I have and have come to the same conclusion. We're talking major problems on the supply side, even in a higher priced environment, just because of the lag times, lack of people. I mean, you name it, all the factors. And so, but it takes a while to get comfortable with that. This isn't iron ore. It isn't nickel. It isn't copper. You can't use that computer model that you plug in the number of radiators they're going to build in Mumbai for their cars. And so I think that's what kind of makes it, either a unique niche or one where people just say, I can't make the commitment to be comfortable that I know what I'm doing. So
I agree. No, interesting points. Absolutely. Well, I'm going to skip a few questions here. I wanted to know for some of the readers and listeners, so with your consultancy with Energy Fuels, it's not 100% clear out there, and I think some folks are probably wondering, is the White Mesa Mill actually currently outfitted to separate and process vanadium ore, or is that still being upgraded?
No, it's always the mill has had a vanadium circuit for 25 years.
So
they've produced vanadium in the past because the Colorado Plateau mines, which I'm sure Mark probably mentioned, are uranium vanadium. And so depending on where the vanadium price was, they would fire up the vanadium circuit and recover that. But, as the current plan is to recover the vanadium out of the ponds, because when the price was really low, they just discharged it. Langer Heinrich's got vanadium, but it's being discharged, or was when the project was operating, into the ponds because it didn't have enough value to justify being recovered. But yeah, the White Mesa Mill is an interesting facility because, as you know, it's processed alternate feed material, which is really kind of waste material that's in various places around the country. It's done the Colorado Plateau ore. It's done the high-grade Arizona Strip breccia pipe ores. It's been campaigned. It goes up and down. It really is always been a unique animal in the business.
Right. No, and it's the best place. It's the only licensed facility. Your Energy Fuels has a lot of leverage right now, so it's a good situation to be in. And anybody who wants to take a crack at doing a new mill, getting the licensing and dealing with all that, good luck. But your best chance might be in Utah or Wyoming. And if you're trying in another state, you might as well just throw up your hands and call it good.
Yeah, people don't realize, and just to touch on it, it's like building a new mill in the Athabasca Basin of Saskatchewan. Gipsel has stood up publicly and said, hey, we've done it, and it's 10 to 12 years, and it's regardless of the market. I mean, the market's got to be to a certain level to trigger that process, basically. But that's how long it takes. So you're not going to get those pounds in a can for more than a decade. And I think the same thing applies in the U.S. There's just no way to fast track a uranium mill in the United States, a conventional mill. So it's too bad they dismantled all of those mills in New Mexico and, in Colorado and Utah and Wyoming. And they're physically gone. So that would have been a very valuable asset to have. So.
Absolutely. Well, moving on here. So everyone fears a future Fukushima type event. How do you see that playing out with regards to the price of the uranium and if the industry faces another disaster? Same as last time, or are the dynamics in the market different?
Part of it is where might that take place. I mean, I think the probabilities are low, but the outcomes are, if it happens, pretty, beyond significant. But if again, it's like if it happens in Ukraine is different than if it happens in, Arizona. So I think the industry learns each time one of these things happens. Obviously, Chernobyl was the design of the reactor, and they're not building any more of those, and they're decommissioning the ones that have been operating. 3 Mile Island, there was no release of radiation. So actually the machine did what it was supposed to do, but everybody got, overly excited. And Fukushima, I mean, as you know, those units were to be decommissioned because they were the original GE units. And it was kind of a non-nuclear side of it that caused the ultimate event because the generators, the diesel generator fuel supply was cut off. So, you'd like to think it's not likely to happen again. And I think it isn't. But then you say, well, then what is it? Is that the final nail to where the supply sector says we're not dealing with this anymore? There's rumors about the Metropolis conversion plant that is, owned by Honeywell that is currently shut down, and it may never come back because Honeywell goes, I don't care what the price of conversion is. We don't want the headaches of this business. So it kind of gets back to your question about, why won't the big guys come in? I think they just see it as something they don't want to deal with. So,
right. Well, at least there's still a few motivated people out there to maybe step in and do something about it. But yeah, no, I would say just looking at, I think the first commercial reactor that entered into production, I think it was in the UK, some 62 or 63 years ago, I can't remember. And just look at the events, and if you cancel 3 Mile Island out, you look at the events. I mean, the time is on our side. Let's just put it that way.
Oh. I mean, I can't quote the number, but as you say, all these units operating for decades in a safe manner. And again, Chernobyl was a unique design in RBMK, and, 3 Mile Island, there was no release of radiation. And the core melted. Right. I mean, I've seen the videos of it, and the machine did what it was supposed to do. So anyway.
Right. Yeah, absolutely. So let's see. Moving on back to Section 232. There's two questions here. We'll get to the first one. Is there a possibility that U.S. utilities will receive additional relief in some shape or form ahead of a 232 decision, either on a state or federal basis? For example, maybe a credit for producing baseload carbon-free energy.
Oh. Well, yeah, that's already happening. I think, that the trend in the U.S. where first of all, basically it works out to where half the reactors are in regulated markets and half are in merchant markets. It's almost an equal split. And so what we saw in the merchant markets is low-cost gas comes in, displaces nuclear, which is still very inexpensive, but it's hard to compete against $3 gas. And so these units were going to, quote, prematurely shut down for economic reasons, not for, a technical issue or, it's like the steam generator at San Onofre. They just, Southern California and said, they're not going to replace this thing. So anyway, long story short. But yeah, I mean, a number of the states have stepped in already. I see New Jersey just agreed to do the zero emission credit program to support the nuclear plants that were kind of on the bubble. And so I think that's already happening. I think most people don't see a big cutback in U.S. nuclear generation. Yeah, smaller single units that are in merchant markets, tend to be under the microscope. But I think the states, and it's, like Pennsylvania, New York, New Jersey, it's across the board almost. And they're going, well, wait a minute, what are we going to do if this shuts down? From an employment standpoint, from tax revenues, from reliability of our power, and they're saying, hey, let's come up with some scheme, which they actually are, to support these units, and that's what's happening. So it's already happening.
Right. Okay. Well, do you believe that UR Energy and Energy Fuels will be punished by the U.S. utilities for their initiating Section 232? If 232 fails to support the petitioners, do you see U.S. utilities looking elsewhere to place their orders in retribution against UR Energy and Energy Fuels?
That's a hard call. I mean, they may want to posture and say, well, yeah, you guys are going to be at a disadvantage. But at the end of the day, we haven't really gotten into it much. The contraction of the uranium production supply side is significant. And so they're not going to have a whole lot of alternatives when it comes to signing contracts. Now, if a little guy, and I don't want to name any, in the U.S. comes up and it can be evaluated as equivalent to maybe an Energy Fuels or a Your Energy, would somebody sign a contract with them, give them preferential treatment? But the idea of complete blackballing of these guys, because again, it's a national defense issue. It's really not, let's see if we can, back the utilities into a corner and get what we can out of them. So I guess I'm not overly concerned about that. So, and, let's face it, if you're Energy Fuels or Your Energy, you should be looking at sales outside the U.S. anyway. And I think they need to get away from the image that, well, if we're blackballed, we're dead, rather than, well, no, we're like Peninsula. We sign a contract with the French, or we go to China and we do one with China General or something like that, not to say we don't need you, but this is a global market. It has been for decades. And there is the utilities globally want diversification. Everybody says, well, just have Kazakhstan produce 200 million pounds a year. Well, that's not going to happen. So.
Right. No, absolutely. No, that's a good points. And there is global competition. And you know what? We may go somewhere else where the market's thriving quite well. So on your last comment there, you said Kazakhstan. What is your thought regarding the decline rates in Kazakhstan, and are further production cuts likely out of Kazatomprom?
What I've been told, and again, my experience with ISR has been mostly Wyoming, where you get a pretty quick run up in your recoveries and a fairly steep decline. And what I'm hearing out of Kazakhstan is it's a very slow ramp up on well fields, and then it's a very long decline, because they stopped putting in well fields 2 or 3 years ago. And now the cutbacks in production were going to happen anyway, but it's always better to say, well, because of this, that's why we're doing that. And so I think that's what you're going to see. And I mean, there's been presentations by senior people like from Uranium One that are saying, there's going to be a natural decline in production unless they get out there and put a bunch of money into drilling. Because see, these projects were kind of shovel ready. There'd been a lot of capital to put into them already, and then they brought in a lot of foreign partners to kind of get across the goal line. But they haven't been doing any exploration. And so I think there was one presentation in Madrid this year where the senior geologist of Uranium One said, well, if this keeps up, production will be down by 40% by the end of the 2020s, no matter what. So again, people, there's an endless supply of cheap uranium. Well, no, if you'll notice, some of the projects didn't go ahead because of economics in Kazakhstan. They went after, big surprise, the low-hanging fruit to start. And now as they get into different regions, much deeper, less permeable, I've heard 10 times the acid consumption. So you're not talking $12 pounds here. So, right. I think, Kazakhstan, now they've got their first IPO. So they've got some funds, and we'll see, how they use those to either do some of that exploration and potential development or just sit on it, or who knows. So.
Right. And on those subjects, if the decline rates in the wells are anything close to what you would expect from a normal fracker, oil and gas, then 2 to 3 years, it's going to start slowing down. Yeah. So that's reinforcing. If it compares anything close to oil and gas, which I think it does, there's a lot of similarities. Yeah.
But yeah, I think yeah. And the other part is the ramp up. In other words, people are saying, well, the price gets to 40 or 50 and the Kazakhs go, well, okay, we're going to come back. It takes them, they got to go out and drill the wells, acidify them, and that takes apparently maybe 18 to 24 months at least. So it's not like, well, you drill an oil well and here comes the gusher. It's got a real slow ramp up on the production side.
Right, and given now that they're a public company listed in London, there's some different views and some different motives in terms of maybe maximizing that share price if they can. They can control that share price more or less by what they do with the production. So I think the tides turn on that angle, and I think if they have any brains, I think that they'll do the right thing, if you know what I mean. So interesting stuff. So. Moving on, another question. We already kind of touched on this, so maybe you have a quick answer, but regarding the supply-demand picture of uranium and increasing uncovered requirements of the material, do you see utilities' interest in securing material increasing, or are they still too complacent about the fundamentals?
I think they're beginning to learn more about the market fundamentals. Again, they've been relying on some market consultants that had, I think, a very optimistic view of future supply. I think, you and I have talked, I call it the big valve in the sky. You need more uranium, price goes up to some level, and it happens. And I think they're beginning to realize that's not going to be the case. And particularly as we see the consolidation, the fact to pick on the Rossing sale. Rossing can continue to operate, but, I think the sense is, anything that's not already committed by Rio Tinto is going to go to China. And so they're beginning to look around and say, well, where will these pounds come from? Canada, they've got the one operating mine now. And as Gitzel has said, they are not putting a dime into anything like Millennium, which is the replacement for Cigar. And Cigar runs out of reserves. It's a finite resource, and it runs out in 2028. And he's very upfront. He said we should be investing in the replacement deposit, and we're not. So, I think they look at the price, and mostly the spot price, and you say, well, wait a minute, that's generally a small part of the market, and it's tag-in sales. People got a little bit to sell or whatever. But it's been heavily influenced by excess inventories, post-Fukushima. And so, in the defense of some of the fuel managers, if the spot price is 21, as it was, as recently as April, and the best long-term price you can get is the high 30s or 40, it's really hard to take that contract upstairs in Charlotte or wherever you might be and get the vice president of nuclear to go, yeah, we should go ahead and commit to that. So I think that's been, kind of what's been holding them off. But it was interesting. There was a comment by UX just Monday night that this lack of contracting, there's demand building up now behind the dam. And they're sitting, waiting for clarity on the 232, which, is not till mid-April. And you can argue it won't be till July after the White House has its 90 days. And then they're going to come in the market. And it's going to be mostly term demand. And it could be, more interesting than we even think it's going to be. Because they're all kind of sitting back, waiting to do those traditional long-term contracts. So, are they using it? I think it's because they don't know where the market's going to go. Is it going to be affected by the 232 where speculation is $80 to $100 U.S. price, and then an effectively lower non-U.S. price? We've had a bifurcated market in the past. where U.S. origin got a premium. So they kind of don't know, and they've been doing these short-term contracts of 2 to 3 years. So it's been buying time. So they can still refuel. They still look pretty good. But you get out to kind of 2021, and things can really start to change drastically. And I think they're beginning to appreciate that. So,
yeah, it'll be interesting to see if the Trump administration just slaps a Buy American stamp on it and see what happens. I mean, we certainly know the Buy American Act and all the other industries that have to do with that when it comes to contracting and different things. So it'll be interesting to see how they apply it.
Yep.
So switching gears a little bit over to the renewable energy stuff and some of these other environmental type renewable energy questions. So there's an argument that renewable energy might replace all other forms of energy, including nuclear, if innovation on storing the renewable energy advances quick enough. What's your take on this, and what threats do you see for nuclear energy at this point?
Oh, I mean, like anything, if you give it a long enough time horizon, all things are possible. I think at the end of the day, there's going to be a need for long-term, low-cost, reliable baseload power. And I'm all for it. If they can, the renewable guys, I mean, the costs are coming down. Now, they've been heavily subsidized, as you well know. And, Tesla's put their big battery down in Australia. I haven't heard much about that lately. But, 20 years from now, I mean, I don't know. I don't think, and will nuclear disappear? I mean, nobody's seeing that. In fact, the latest forecast I saw has, the industry growing about 30% on an installed capacity basis by 2030, which is what I've been seeing elsewhere. So that's kind of becoming, a slow growth but positive environment. Now, down the road, if somebody can come up with some super cheap solar thing that allows you to store, the power and all that, but then how much capital and time does it take to make that transition? So I think for, investors today, they'll ask, well, what'll happen in 2030? Well, I mean, I still think nuclear will be around. So.
Right. No, I agree. And for me, it's a non-threat. It's just a non-issue, period. Because the infrastructure's in place. There's just too many other factors trying to put batteries here and there, store that here and there, the space requirements, the solar waste, the wind turbine waste, the space it takes on the landscape, the environmental concerns, the wildlife concerns, just all the other crap. And then you have a sneaker. The sneaker is SMRs. And if SMRs are going to be deployed on a wide-scale basis post 2025, 2028, which there's a lot of money flowing into the SMRs and a lot of big names involved, that could change the whole thing significantly. Maybe big plants, maybe not so much post 2050, but SMRs could be the new nuclear. I don't know. I'm just speculating, but I can tell you for this cycle and for the equities, this is a non-issue.
Oh, well, yeah, all that's interesting stuff. And like say the SMRs, now they're saying, well, maybe the U.S. Department of Defense uses them in Alaska. Yeah. I mean, they had one in the Antarctica or somewhere, a small reactor. But yeah, the big reactors, it's kind of tough. I mean, you see the big programs are all government. I mean, it's China, India, the Middle East, wherever. Yep. It is a challenge for, as we know, the Georgia Powers and the, South Carolinas to really handle these big quadruple billion-dollar plants. So that's, well, when people say, well, the U.S., Western Europe, parts of Asia, and yeah, that was the first phase. And now it's the shift is well entrenched on, as China and elsewhere. So, the growth won't be in Western Europe or the United States or whatever. I think the view is U.S. program will stay relatively stable to maybe down a little bit. So, It's not.
Right.
This isn't where the action is.
Yeah, absolutely. And while we're talking about this, the coal plants just keep on rolling. So,
Yep.
it's interesting how that's going to go, and when coal is going to be completely shut off for energy generation purposes.
Oh yeah.
I can tell you, we've got a number of years to go. So,
Yep.
so on this issue, just let me. I got there's some other questions on this, and then I'll get your view on it. So we had a reader write in with a question regarding the true cost of the various forms of energy generation. While the cost will greatly vary depending on what nuclear power country we're talking about and also the energy forms in those countries, it's difficult to get an honest figure. There are issues with surcharges, government fees, regulatory hurdles, the cost of that, the operational costs, and much more that go into a figure to see on your power bill. So it's different in France, it's different in Germany, it's different in the United States, and depending on what state you live in. So we suspect the figures for your renewable are pumped and skewed due to various subsidies, credits, and discounts. So there remains to be too much hype and misinformation regarding renewables to be able to call it a true competitor. The technology is new enough that the jury is still out regarding true maintenance, repair, replacement costs. How many times do you replace wind and solar and components of them through the total usable life of a nuclear reactor? So there are also carbon pollution environmental costs which have not been fully translated yet. So these are tough issues that have not been answered with any sense. So Dustin, what's your take on the issue and the very varied worldwide costs for the various forms of energy and their credible and with that, do you have a credible source to start an investigation into these true costs?
I'll answer your last question first, and the answer is no, that I'm aware of. I mean, it's being looked at, as you know, all over the world. Everybody's doing studies, but just as a benchmark for the listeners, new reactors are 60-year operating life, and now in the U.S. and other countries, they're looking at 80 years. So when you bump up other forms of energy, you've got to be looking at almost a century going forward. So I think it's really hard, like gas. I mean, I don't know a fuel manager out there in the U.S. that thinks gas will be at or below $4 for the next 60 years. But they can't convince management sometimes that that's the case. So again, I think, assuming I think the costs on the fuel side in nuclear will stay, we're going to have to see some uplift across the board. I mean, enrichment services at $35 are a joke. But at the end of the day, I think it's because of the stability of the fuel costs and the role they play with a nuclear plant. The NEI just put out a study a few weeks ago looking at nuclear costs in 2017, and they're still at the low end of the spectrum. So, what happens in the future? Are things going to get a lot cheaper on the, as you say, the renewables and all that? It's hard to, any study, because it's an economic study, and that's my background, economics, is so dripping with assumptions that can be picked apart that, and that's what makes, I think, generation planning for the utilities extremely difficult. Do you go with the short-term gas turbines that are going to have to be replaced? You're facing, volatile gas prices and on, or do you go with a big capital-intensive nuclear unit that generally you can control the costs fairly well going forward? So, but to have any credible, like I said, there's so many almost unidentified costs, be it with any technology. I mean, let's face it, nuclear's had its share of subsidies. It's not, totally clean in that regard. But, at the end of the day, I think it's really hard to come up with, anything that's accurate.
Right. No, and I think there was an article that just came out recently about some of the there's been some declines in the operating costs on the nuclear plants. So that's interesting to see that come out as well. And obviously the United States has a lot of red tape, whereas a country like France, which has a significant amount of nuclear in its energy mix, has some economies of scale and probably cheaper operating. But then there's other stuff too. Like for example, when you get your power bill, perhaps for example in Oregon, you have all this other stuff. You have hydro subsidies, you have hydro taxes, you have fish taxes, you have crab taxes, and whatever stuff that's in the river, and all these taxes attached to an energy bill that comes from, say, a Pacific Power or these other, Portland General Electric, et cetera. And so anyway, it's a little bit laughable as well. But so moving on, jumping out of that, so the utilities intimately. Give us a historical example of your dealings with them and getting a supply deal done. So kind of walk us through how you kind of get a supply deal done. Give us some info because you've done it.
So basically a term contract. Is that what you're? Well, yeah. I mean, as I mentioned earlier, you first of all got to represent a credible supply source. If you're viewed as the promoter, without I'd trust this down the road. These are conservative guys. Like I said, they have to operate these plants. You don't let a multi-billion-dollar plant sit idle due to lack of fuel. And so, they first of all have a diversification objective. And they look at, they don't want everything from one country, one producer, one technology. So they do allocate on a global basis their fuel requirements. And what normally happens is, and let's kind of use Paladin as an example. The focus was on the U.S. utilities because they tend to be the least covered going forward. So they're going to have more opportunities, kind of closer in and a bigger volume. And the contracts are usually about 200,000 pounds. And if you go to an Exelon, they burn 10 million. So they're willing to say, yeah, we'll do 200,000-300,000 pounds a year. And, we'd like to see kind of this kind of pricing depending on where the market is. Like today, I think they'd like to lock in, a $30 long-term contract. So you have to be responsive to the kind of, how do they view the market? And part of that is getting to know them. I mean, and it's just literally, lunches and dinners and talk to them at conferences and go visit them. And you can get the sense of, some of the utilities, for example, have just stayed away from market-related contracts. Duke is an example of that. They tend to do historically defined price, so base price or a series of fixed prices. And then some of them will do due diligence. In other words, some of the utilities, not all, have geologic consultants that they rely on. For example, Exelon has one who's based in Canada, and they'll review, kind of all of the 43101s and bankable feasibility studies, which have to be done by reputable consultants. You can't just have XYZ, feasibility study company do it. And so, it can take a while, particularly if you're a new producer. And so, but you've got to, the first phase is kind of getting your nose in the door, getting their attention, getting them to evaluate. Some of them will do off-market contracts where they don't have to do a public solicitation. Some of them are required to come out with a broadly based solicitation that you then have to respond to. So again, this gets back to knowing the utility. And, then you put the draft contract in place. And, most of it's boilerplate. There's only 3 or 4 terms that are really of importance. And, this usually takes place 2 or 3 years before initial production. So that's why you've got to get out and kind of do it early as part of your business model. Now, having said that, once you've gotten their confidence, for example, some of the contracts done for the Calakira project, which followed Langer, there was one utility that I won't identify. I called them and I said, well, we're looking for contracts and $73. And he said, okay, I'll do that. It was a 5-year, couple of 100,000 pound a year deal. So you go, oh, okay. So that can happen. Actually, the bankable contracts for Langer, there was a piece missing literally up to the final moment. And I literally was at the BMO conference with John, and the utility called and said, okay, we'll fill in those 2 years with the appropriate volume and pricing. And that's how that came together. Everything else had been kind of put in place, but the banks were saying, well, you got it, those 2 years, you've got to fill that in. So some of it is, kind of, if you're doing bankable feasibility contracts, the bank will tell you how many pounds for how long at what prices. And so you've got to go out and fill that, those criteria.
Right.
And that way, that's not so easy usually.
Yeah, and this is good information. And what exciting times when you got some of those calls, and what a simple call that one was. That's great. Yep. And you know what? My suspicion is when you call some of these folks going forward, it's going to be perhaps in some cases much easier than it was the first time around. So good for you, and good for the companies who employ your services. Because that's a good piece of information. So on the
Andrew, just not to be big nosed as they say in Australia, but actually one of the fuel managers for a large U.S. utility told me. He said when it was announced that I went to Paladin, he knew me well enough from my history. He said that put them on the radar. He said I needed to then watch what they were doing. So some of it in the industry is still kind of personal relationships, and it's less so today than it was, but it's still very important.
Absolutely. No, and the wheel greasing, so to speak, is an important piece. And so on the procurement side, both the public procurements and the private procurements is part of is everything based, is the evaluation based on price, or is there also technical ability included, like reputational type questions on the technical proposals for these procurements, or is it just solely based on price?
The answer is today price is more important, but actually, a long time ago, I worked for a company called Colorado Nuclear, and we did mostly procurement consulting for utilities, and they tended to use what was at that time total evaluated cost. So it was the economics and the political risk, delivery risk, whatever. Sure. So it wasn't just a straight, NPV calculation. Now, having said that, I also worked for another utility that a supplier came in, clearly the economic winner for a long-term contract, and the utility, because they had to do a broad-based distribution, they said, we don't want to sign with these guys. And I won't name names. So there was a way to kind of say, well, from a security of supply standpoint, they got dinged on that and all of it. So, yeah, I think, it's more than the economics clearly are important, but you've got to have that delivery history and, political risk evaluation and all of that, they're going to get the pounds. They need the pounds at the end of the day. So.
Right. So tell us what your typical day is like, and what things are you enjoying while you're not at your desk?
Up here, well, I think as you know, we just relocated to Steamboat Springs in northwestern Colorado, and so Becky and I are probably beyond our ski every day kind of thing. But yeah, there's just enjoying being up here, and the other's grandchildren. As you're aware, we've got a whole herd down in Scottsdale. So that's a nice place to go in the winter. And so that's kind of, what we've been focusing on. And I just enjoy the industry. I mean, people say, why are you doing this? And it's just, I think coming into next year, I think 2019 is going to be what I like to call a confluence of events, be it supply cuts, be it demand hit the market, 232 decisions. We haven't talked the worldwide Kazakh arbitration. There's a lot of things that could come together, which will make it extremely exciting from a positive standpoint. So yeah, I probably spend a little too much time still in the industry, but I've been doing it, as you know, since 1973. So it gets in your blood.
Right. Well, I'll leave the favorite microbrew question out of the discussion.
Oh, well, that's another story.
So with this new Uranium Royalty Corp, which I have not studied on, but I have seen some promotion already coming out of it, so it's making me run the other way a little bit. But they did pick up a stake in Yellow Cake. So what do you think of this new URC and the people behind it?
Well, it really kind of came out of Uranium Energy. So it's Amir and Scott Melby, I know, is a senior person there. I think they stepped back and said, the industry needs a variety of financing vehicles. And as you pointed out earlier, the royalty side has just never, been part of this business. So I think they said, well, hey, here's something that would provide an alternative for producers to raise some amount of capital to move these projects forward. It's not going to all be bank financing or equity. And so, there was a presentation at the big conference in Boston, a month or so ago. And I think it raised a lot of eyebrows just from hey, we hadn't thought of that kind of basis. So I think at this point, it's still a bit early days. But, my view is, hey, anybody that can come in and bring something new and different, I'm all for. And so I think at this point, we'll just have to wait and see. And yeah, they stepped up and took a nice foundation share of Yellow Cake. And so that was a big help. As you know, the IPO side, if you have a couple of large investors to start with, that tends to tamp down the concerns a little bit. So, I've known Amir since he got in the business, which is now 15 years ago, and, was the prime mover with Uranium Energy and, has done a lot on the production side. And Scott, I've known since he got in, right out of college. And, he and I have had a close, business relationship for years. And so, we kind of think, as you know, from along the same lines, sing from the same sheet of music. So I'm like, yeah, I think this, is it going to be the answer? Well, probably not, but I think it's part of the answer for, say, capital for new development.
Right. Absolutely. So on Yellow Cake, real quick, you guys have bought quite a chunk. What's your take here at $30 bucks, $29? What's your take here? Are you guys looking to maybe secure a little bit more in 2019?
Well, the basics for Yellow Cake were we bought 8.1 million pounds from Kazatomprom under a long-term contract. At the time, it was July, was $21 based upon the timing of setting the price and things like that. We then bought another tranche from them under the contract. But, we've got the right to buy up to $100 million a year from them of uranium. So it's a dollar figure for the next 9 years. And so it is interesting because we are now coming up on the first of the 9 annual options. And, we're beginning to look at, well, I think to me, it's clear the price will continue to move up. We've hit a little bit of a plateau here at 29. Cameco's got to buy another 15 million next year. And, even UX said that this year there was a 10 million pound deficit between supply and demand in the market. And that was being filled through, consumption of inventories. So, the cheap pounds are being vacuumed out of the market. And so, we're pretty comfortable. Things will continue to move up. But then, do we do the whole option in January? Do we do part? So, that's kind of what we're looking at. And then we have the alternative of just buying in the market. We don't have to buy
Right.
from Kazatomprom. And so that's another issue. We have other financial buyers coming in. I guess Uranium Trading Corp is next week is supposed to do their IPO. So, and we're seeing more and more of that pressure. So I think, I won't say it's a no-brainer, but I'd say that the probability of higher prices next year is certainly greater than lower. So the answer is I think you'll see yellowcake, again, depending on where the NAV and the stars align, we're likely to be in the market, either buying under the Kazakh deal or directly in the market. So.
Right. Interesting. So where's for the clients that you're buying from, where are you storing this stuff at?
Well, it's all stored right now at Cameco, but we will be putting storage agreements in place in Europe and in the U.S. at Converdyn. So we'll be able to, move material around. And, there was a recent opportunity for a location swap of like 75 cents a pound, which we could have done part of it. And so there's things like that crop up if you've got storage agreements at all three converters. So, but Yellowcake doesn't plan to sell anything. We are a buy and hold business model. We're not going to trade. We could do some trading. I've got a background in nuclear fuel trading, but it's sit on the asset and the investors can then act on their view of the future on pricing of the commodity. So.
Right. So I have to ask, because we've talked about both companies. So if you had to pick one, Energy Fuels or UEC, which one would you take?
Well, I favor Energy Fuels just because I know the guys. I've known them. I work for the old Energy Fuels, and I know the mill. I know the Alta Mesa ISR project. Paul Goranson and I worked together. I did the marketing, and he did the construction and operation. So I just, I know them more, although, I know the guys that, all the other guys pretty well. But Energy Fuels, I think just because of the diversity of projects, the production capability, you just run down the list, I think is really in a premier position in the United States. Right.
So tell us what your schedule is over the next 6 months, and where can folks find you?
Well, again, I'll be in and out of Steamboat. We'll be down in Arizona. I have a hip replacement in January, so I'll definitely be at my desk. But so I'm available. Email is dustin.garrow@gmail.com, and I can be reached by a phone at 720-933-8860. Pretty much anywhere in the world, as you know. So, but I also do work for Bannerman, which has the Atango project in Namibia, in addition to Yellowcake and Energy Fuels. So, kind of 3 days a week at this point. So,
any conferences coming up that you're going to attend in the next 6 months?
The big one will be in April. It's a combined World Nuclear Association Nuclear Energy Institute gathering, which was in Madrid last year. So this year it was supposed to be in Shanghai, but apparently there's some issues about visas being issued, and so it'll be in the Miami area. So that'll be the first big industry gathering of the year. Will be in April, somewhere in South Florida.
Okay. Well, Dustin, it's always a pleasure, and we look forward to having you back again soon.
Happy to comment on the industry, and like I said, it's in my blood, so I always have views to share.
Well, thank you very much, Dustin. You have a good one. I appreciate it.
Okay, thank you, Andrew. Bye now.